Check it out. All right, time to do a little interlude from my Russell hunting. The Russell, as long as I could pop it up now, as long as the Russell stays below that 12-month moving average, as long as it stays below this high right here, this 1605. What's my high? 1603. So 1605. As long as I don't get a monthly close above that, I'm still in a. I'm still going to start looking for shorts. But if ever it starts turning up and the Russell starts looking like it's peers, American peers, that means the risk is going to be on. See if you're starting to close up above. That's definite stage 3. And even here, the Dow Jones is looking to turn up. NASDAQ, same thing. Stage analysis brought to my attention the NASDAQ and NDXE. NASDAQ equal weight. Look at that guy. I posted something today on Twitter. Already breaking out of that base of that jump off. So down, measure move, and we should be going all the way up here. American, NASDAQ, SPX. Same thing, not quite as nice as the NASDAQ equal weighted, but back above. Now we have inclining 12-month moving average. And until this turns over, until the price action goes back below the 12-month moving average, you can't think about shorting this. For whatever reason, it's going up. The trend, the monthly trend, is in its favor, so you don't want to go against it. I could actually recap world markets. China above 12-month moving average. So right here, you could have a crazy pattern. Multi years. 2015, right here. So that would be you're making higher lows. Sorry. And you'd have a few measured moves. This would be less greedy of measured moves. So if ever you get a close above get a monthly close above where's my close? 14,447 or 14,450. Here's the measured move. So there's no bull bias, bear bias. I try not to. Sometimes it looks like that if you're starting to see the weight of evidence that's pinching into stage 4 declines, and then you have that bear label or etiquette to you. It's very emotional. I've noticed that we should avoid using bear and bull and just look at the evidence, not say it's going to the moon and then don't give any evidence why you think it's going to the moon. You're at the end of economic cycle, and you got to give facts why you think something's going to go up, or explain to me what your framework is, not just it's going up and you're a fool if you don't think it's going to go up. That just, for me, does not make much sense. So use good rationale. Respect your framework. If you're back above 12-month average, like I said, you can't short. And I won't go long right here. Maybe if you zoom in on the weekly, China, you could probably time an entry here. But the ultimate move would be a breakout above this horizontal break line. And that's the bigger pattern with the less greedy of targets. If you want the bigger greedy target, you'd use this high to low added to the break line. Taiwan, same thing. Above 12-month average, you can't short. So until it starts turning back, and then you really get to see those lower highs set in, you can't short. You have to wait for it to unfold. And if you want to play long and you're on the smaller time frames to get a single, you have to expect that you're going to get some important resistance right here at these levels. So you could expect pullbacks and then play on those pullbacks back up. SPX, same thing. This is the crazy implied measure move. Added to the break line. So that's how you adapt. I'm putting all these targets This is without looking at macro technicals, but macro technicals, I don't know, maybe they could stretch out. So maybe in the 4 or 5, 6 months that we need for them to roll over, that this price action can skyrocket. You could get huge green candles. So maybe it is envisionable that you get in 2-3 months that you reach these targets. If you had these big moves that would go up, letting the economic data roll over and be unavoidable, and then we roll over down. So anything could get squeezed in. Depends all on the speed that the market will decide to go up and not slow down en route to its target. Here's the regular NASDAQ 100. So if you want to play the NASDAQ, I'd go for what stage analysis recommended, the NDXE. Here's another measured move. So until you close above, for me, especially because of the economic data, I think it's higher risk. So I'd really want to break those highs. Some people might say you're getting late for the party. Well, that's the way it is. If I was at the beginning of economic cycle, I would do like 2009. I would start playing even if I hadn't went above important resistance. But I know I'm at the bottom. I know I have the fuel tank full of unemployment, a lot of unemployment, non-farm payrolls low, interest rates high. So that's the fuel that they could use to propel the markets higher. I would start earlier going long. But right here, since I think it could fail any moment, if it hits good resistance right here and the economic data starts really rolling over, I don't want to get trapped. So that's why I'm still looking at the bearish scenario, most probable. That, but I can't short right now, not at these levels. Here is my Dow Jones. Same thing, measured move. So I'm going to put the measured moves. I always put the measured moves when I'm closest to the break line. So there's no bias here. If I think the break is going to be up because I'm closest, that's the scenario I'm going to look for. And if the price goes action below, I'm going to look at the other scenario. So that's that target, 29.50, 29, almost close to 30,000 if we get back above that. Look, Japan, okay, less good than the American markets, then still below a declining 12-month moving average. So that one is really underperforming. So if you'd want a short index, world index, Japan would probably be a better candidate than the other ones that are above their 12-month moving average. Russell, same thing, below the flat increasing 12-month moving average. For me, that's my risk on, risk off. If the Russell can't make new highs, if the Russell keeps underperforming its peers, you see it's not even coming close to breaking out of a pattern that could give you an upwards target over previous highs. For me, that divergence is saying that underlying health, there's not full trust right there. India, just beautiful. Really didn't break down back in October, barely. Held in there, a lot of noise, but markets essentially decide for it to go up. And it's trying to break out above its monthly defined breakout line right here. Hong Kong above, so that one looks pretty much like China, riding up high. But again, if you'd want to time an entry for the Hong Kong markets, you'd have to go on the weekly chart, and you're probably going to get something nice right here, trying to roll up, and expect some resistance right here when you get to these higher levels right there. Pullbacks, the same thing I've been doing on the stage 4 declines, using support, monthly defined support as pullbacks, and then you get closer to that 30-week moving average or that 12-month moving average for an entry. You do the same thing when you're going up. Netherlands, starting to look a little bit like the American markets, but not quite there yet. So that's the pattern. That's what I see morphing right here. And then every time monthly defined support is not broken or resistance not broken, and then you bounce in between, and you show, so whatever the market thinks the resistance or the support is, it's drawn out right here with these opens, these closes on the green candles, these closes on the red candles, and this is the measured move if you close above. So all these scenarios, when I put my arrows down, it does not mean that's the target. There's ifs. There's a lot of ifs in my framework. Those are my check marks. So if you close above monthly defined breakout line, then that's the implied measure move right there. Australia, ooh. So Australia did not fall into the abyss. Nice pattern right here. You're not out of the woods yet, but you can't short it. I wouldn't go long right now. I'd wait to pass this monthly defined breakout line right there. Anything could happen in a short time. When it was going up here, people could have said, hey, going to the moon. And then 2 months later, we defined that support, that monthly defined support there. So don't jump the gun. Don't get trapped. And that's why traders like Mark Minervini, they say this is still choppy, still hard. When you're starting to trade, when you have this type of volatility that you've been below 12-month average, you don't recuperate that easy. It looks that easy because of the speed went back up, but this resistance is still there. So watch out for a bounce once we touch it. Look to see if we really bust through or we start going back down, guys. France looking very, very nice. Look at that. It's perfectly. That resistance has been tested so many months with that noise above, all those traps. That is just insane. And now we've created a big top pattern right there. It really, really respecting that monthly defined resistance. That's really impressive. So if it closes above, I'm really going to honor that as a bona fide breakout. And here's my measure move for France right there. All the way up to 6,200, 6,250. If you get a close above, look at that. On the dot every single time. Close 5,500 is pretty much it. 5,500, look at that. 5,500, wow. So really, that's let's see if France can make it up back above that. The stoxx 50, climbing above that 12-month moving average, creating a big top pattern. Wow, look at that. When you take a step back, lower highs, higher lows. So when you take a step back, higher lows. So if this unfolds and you get to go through ascending triangle, and crazy measure move. So it looks all good, just like the bearish scenarios, the stage 4 decline scenarios, or the downwards targets. But it's an if. You have to go all the way up here, and they've tested it here before, and it did not go through, and it went back down over the following year. End of the world. Oh, to the moon. End of the world. To the moon. It could be doing that for the next 5-10 years. Who knows? But right now, this is the line in the sand for the stoxx 50, what I see. Singapore, climbing above 12, declining 12-month moving average, and still far away from being playable. Maybe play it with like the Hong Kong and the China, not wait to get out of that higher, overcome that VAR high. But if you start, the 12-month average starts flattening and going upwards, and since you're far away from that overhead resistance on the 30-week average, you probably could get a timing to get in and expect pullbacks when you start hitting right here the wall, previous support and resistance, etc. UK, the ftse, back above 12-month moving average. The picture has changed. It doesn't take much, a few months, and the landscape has changed. This is in no man's land right now. So if you want to play an index, if you want to play upwards, you have better choices with the ftse, with the NASDAQ equal weighted. Those are the ones that are breaking out on the monthly candle chart. Those are the ones I would play. This is no man's land. Resistance right here. So you could probably play it maybe on the weekly, but expect some resistance right there. It all depends on the time frame that you want to enter, guys. So that's it. Fast market recap. I thought I'd be doing a podcast on copper, but got sidetracked, and it's good to take a sneak look back at the index. And the Russell is still not looking very good, guys. So it's weak on all the world markets. The few that are still below a 12-month moving average, guys, on that higher time frame, It's our friend the Russell. So what is he telling us, man? Why won't he do as good as his friends? All right. Thanks, guys, for watching. Don't forget to like if you appreciate it or subscribe. Thanks, guys.